Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in investment property in the residential markets of Oklahoma City and Tulsa. What I want to discuss today for investors is insurance and taxes. These are two things that can really impact your return on investment, especially if they're very, very high. Now, we know that insurance rates are going up everywhere, even in the Oklahoma market, but not that much in comparison to other areas. So, for instance, we'll take the hurricanes that exist in Florida and affect that market, or even along the coastline of the East Coast, or the wildfires in California. Insurance companies are leaving those states. They're not actually even wanting to insure anything. In fact, I know in Florida, they've had to do a kind of a state-sponsored insurance company to get any insurance for people. And if you have a mortgage, you have to have insurance on the property. If you have cash and you buy it that way, you can probably just get liability, but that's not what an investor typically does. So the good news about the Oklahoma market is we have very reasonable insurance rates. And the reason why we have that is mainly because we don't have that many amounts of claims. Now, you hear about things like tornadoes, of course, but everything has changed with El Nino and climate change. I mean, there's more tornadoes going on in the Deep South than there is in the Oklahoma market. And if there's a lot of claims, that would definitely be a factor, but it is not a factor. And so we can make a really good return on investment for you on a rental property because the insurance is very, very reasonable. That's number one. Now, the second thing is property taxes. Now, property taxes are going to be one of the three main ways that governments get their money in the states and the cities. And that is through property tax, through sales tax, and through income tax. So it's a combination of all three in the Oklahoma market. Now, in other markets, like take Texas, for instance, Texas doesn't have income tax. And so because of that, because you took out that one bucket of getting money for your governments, you got to get it another way. And this is why that, say in Texas, you have at least twice the property tax rate, even higher than that in some areas, than you do in the Oklahoma market. Now, you say, well, I know, but I don't want to have taxes, or I don't want to pay income tax on my property. Well, the key factor is you're not going to pay income tax on it. In other words, you're buying typically out of state. In other words, 99.9% of my investors are from out of Oklahoma. And so if you made money, according to the IRS, you would pay taxes. But the thing is the deductions like depreciation, like improvements, like repairs, are all deductible, and these deductions are greater than the positive cash flow that you're making on that property. So to the IRS, even though you're making money, it's a paper loss, and it carries forward. It gets bigger and bigger because all losses are carried forward as long as you own that property. So the thing that's really exciting to me about selling Oklahoma City real estate and Tulsa real estate, A, taxes are reasonable, and B, we don't have state income, or we do have state income tax. You don't have to worry about paying for it, so therefore your property taxes are lower.